And then your top pick is not one of those two names, but still in the mega cap tech area.
Yeah, well, Jenny started off the show saying we can't just keep picking Amazon, but I will say Amazon had a pretty lousy.
You disagree.
You know, she did that to poke me, but Amazon's had a pretty lousy, lackluster 2025. I mean, maybe it's up 4 or 5% on the year, but I think about that as like a reset, a stall. And if you're thinking about moving forward, we're 2026, you've got to pick one stock, and it's really hard to do. But I just think that the trajectory for Amazon is playing catch up. AWS, what they're doing with operational efficiency, logistics, advertising, Amazon Prime, the video service. They've got a lot of levers to pull, and I think at some point here in the very near future, we're going to see the share price catch up to the fundamentals.
Malcolm, you're in Amazon still. It gained about 5% in 2025. Do you think you should stick with it, or are you going with Jenny and saying, I think maybe it's time to cut and run?
No, this was actually going to be one of my big picture ideas or big picks for 2026. And maybe to Jenny's point, I thought it was a little too obvious and a little I've been championing this one for a while. But I agree with Kevin when he said logistics and operations. I think maybe he's talking specifically about robotics. And I think a lot of the investments that Amazon has made into robotics have actually sort of hurt their short-term prospects, but actually will impact their longer-term prospects going forward, 2026 and beyond, because something like 600,000 warehouse jobs they're expecting to be replaced by robots in the next couple of years. And they're also expecting, Morgan Stanley's estimate was something like up to $4 billion of savings is what Amazon should see this year going forward from installing those robots and investing in robotics as heavily as they have. And so all of that should fall to the bottom line for Amazon, a company that's so tight with its pennies. And so I imagine that to be the catalyst that really helps to get those numbers moving this year.
Jenny, you know, we can't all be winners. Fiserv, real bummer for you. It was down 67%. What do you do with that one?
Well, we've actually talked about this a lot. So first of all, if you have a loss in it, use the tax loss harvest. But you really need to always remember that your starting point is today. And Steph Link posted this great thing. I screenshot it. I wish I could remember exactly how it was phrased. But it basically says, like, Happy New Year. You know, the right way to live life is, like, stop trying to change the past, but your starting point is today. Today you look forward. And when you stop and look forward on Fiserv, what you see is a company that's trading at a super, super low valuation that has incredible built-in technology at all the major banks. Like, yes, they had this major stumble, and it had to do with sales in Argentina and what was pulled forward and expectations. But it's still a great company, and they have things like Zelle and Clover and all these like big bank backbone software. And by the way, they mint cash flow. So you look at it and you say, hey, if they get back to high single-digit, low teens earnings growth at the valuation that it's at now, you hold on to it and play it for the future. By the way, it's a new management team. The new CEO and the new management that he's brought in is excellent. And so I think, you know, who was I on with? I think I was on with Joe the other day, and he was picking on me. He's like, well, it's 3 quarters of decreasing earnings growth. I'm like, that's because the new CEO came in, got realistic, kitchen sinked it, said, hey, we have these problems from Argentina. Let's be very realistic now. But he's a very talented person, and you need to give him, I think you need to give him the benefit of the doubt that he says, I've got a great business here with great natural resources within the business in terms of what the business already is, and we can make this work going forward. So I think you look at it from a new year, a new day, look at it going forward. Don't look too much at that past.
So speaking of a new year, give me your 2026 pick.
Okay, mine's different. And guys, by the way, sorry about picking on Amazon. I should have said Apple. That would have been a better thing to pick on.
We can go there next if you want, but give us your pick.
I love picking on Apple, so anytime. All right. My best pick for the year is offbeat. It's Sabra Healthcare. And here's what you need to know about it. What you need to know is it trades at 12 times FFO, so about half the market multiple. It has a 6.5% dividend yield. They are in the retirement and skilled nursing space, and behavioral health. So 50% of their business is in skilled nursing, 34% is in senior housing. The rest is in behavioral health. You can see how the demographic winds are just at their back. By the way, they are expected to grow their earnings 5.5% this year, so you've got decent earnings growth on that. It's an excellent management team, and it's one of the rare companies in my portfolio where you can say the fundamentals alone are very encouraging, but it was up 17% if you include the dividend last year. The momentum's at its back also. I don't often get to marry momentum and fundamentals, so I thought this would be a good one going into the new year.
It is very interesting. The demographic piece of it just blows my mind. I mean, it feels like it has to be a winner to some degree.
I think so. And you know what else, Courtney? This is a company that doesn't have a threat, doesn't have a negative threat from AI. If anything, I think that the retirement homes, that the nursing homes, that this area of healthcare, if anything, AI should stand to be like a wild benefit to them. The doctors, the nurses, the technology that they can put in patients' rooms to help, that should just be the wind at their back in terms of making staff better, making patients' experiences better. So it's kind of cool to find something where it's not a threat.
I'm so hoping that AI helps healthcare in so many ways for all of us. I just think that could be such a powerful tool if we can figure that out. Malcolm, I want to move to you for your top pick. This is a new one, or at least a new buy for your top pick for 2026.
Yeah, so I think 2026 should be a great year for fintech broadly. I think with the declining rate environment that we're going through, the increased deregulation in the financials sector, and the banks themselves sort of trying to figure out ways that they're going to implement AI, but not really being able to make it happen. I think a lot of the other fintechs will be able to get there faster. And so Visa is the pick for me. It's one that I've been watching for a very long time. I've been wanting to own it for a very long time and just could not pull the trigger on it because it always felt like the price was going to come back in some. And because we're giving Warren Buffett his flowers all day, I'll say that I learned from their recent decision to pull the trigger and buy Google that maybe I can just admit that it's not going to come to me. I have to come to it. And so this seemed like a good time to be buying Visa because the announcement a couple weeks ago that they were going to be introducing stablecoin via a partnership with Circle to be able to offer global remittances, essentially, that's a huge market to disrupt to me. There's up to 6% is the fee for settlements moving dollars from place to place. If I'm sending money back home to Mexico, back home to Israel, or back home to Nigeria, wherever, there's a 6% charge to the people doing that from the United States into those countries, which is an awesome place for a company with a large install base, if you will, like Visa, to be able to come in and disrupt that, and that margin is their opportunity. And so the market didn't really seem to react too much to that announcement, which told me that the story isn't really baked into the price yet. And so it's one that I intend to continue buying as that share price does start to come down. But I decided I didn't want to wait anymore because that gave me an indication that Visa is going in a direction that I think the rest of the fintechs also are.
And Visa was just added to the new money list at Compass Point with a 390 target. We're sitting about 348 right now. Kevin, I want to give you a comment on that one because I know you also own Visa.
Yeah, we've owned this forever, Courtney, and I agree with Malcolm's comment about the Circle transaction, or however you're thinking about bringing in this technology. It's offense and defense. There was a point in time when they were thinking that the Circles of the world would be taking business from Visa. And when you think about the idea that this is something that they can do together uniquely with incredibly high margins, it's an exciting opportunity that I agree is not baked into the stock in any way, shape, or form.